Hello everyone, welcome to today's video. Today I'll be continuing with the mutual fund series. If you remember, the first one was a general introduction to mutual funds. The link is in my description. Then we covered into what are the technical fundamental parameters while considering a mutual fund, and especially applying that for the SAB Invest mutual equity mutual funds. And today we will be applying the same fundamentals, the same knowledge, but on AlRajhi Capital mutual funds as you have requested. So this is the third video in the mutual fund series, which gives you like an end-to-end picture of the Saudi stock exchange and mutual fund options that you have. So let's get started. If you haven't watched the SAB Invest one, even though you do not have a SAB Invest account, I would still recommend you to watch that first, because that covers the technical or the theoretical knowledge of what are Sharpe ratios, how do you consider the alpha beta, or what are the other quantitative and qualitative parameters to be considered when looking at a mutual fund. So I do not want to repeat it here. I'll be directly applying that information to the options that AlRajhi Capital House has provided, and then we will just directly go into the analysis part. As a very quick recap, the four key criteria that we considered: the fund manager and the capital house. How big is AlRajhi? The fund house is also quite big in terms of the AUM, so it's quite solid in that terms, right? Similar to SNB, similar to SAB Invest, etc. Right? In terms of the fund managers, in terms of the number of options or number of funds that it provides, right? You have to take a look. Then you have the historical performance, not just looking into the last 1 year, but also looking into last 3 years, or ideally 5 years or 10 years would be great. But if you have the data, but otherwise 3 years or 5 years. The volatility in those returns, it need not be just like one single year of 100% returns and the rest of the years were like -2, -4. It doesn't make sense. It's just out of luck. So having less volatility in your returns and having a higher returns is a good indicator over a long period of time. Expenses, which covered like all the different expenses: management fees, subscription fees, redemption fees, expense ratios, etc. Right? So I mean, it's good to have a fund with a lower expense ratio, a lower subscription fees, a lower starting point, of course. But at the same time, it has a trade-off. I mean, if it has a trade-off with the returns, then you have to take a call out there, right? As I was explaining in my last video. And the fourth one is some of the technical parameters of a mutual fund, like the alpha, beta, standard deviations, and the Sharpe ratio that we were considering. So these were like the four key buckets. Mutual fund. I've already shown you how to find all the listed mutual funds, individual stocks on the Saudi Tadawul stock exchange. Go to our markets, click on the mutual funds. Here there will be a bunch. This will cover entire equity, debt, cash, REITs, everything. So individual as well. So I will select equity. I will select AlRajhi Capital. By the fund manager is AlRajhi Capital. Sharia compliant is fine. Fund exposure, I kept it like local, international, just to show all the different options that people can invest in. It's not just Saudi Arabia. You can also invest in the Arabian markets or GCC market. Then you have international ones like the US markets. You can invest in the South Asian markets. You can invest in the European markets, etc. Right? So you have that opportunities. In terms of fund objective, it's growth, income, capital preservation. I explained last time, right? What is growth? Growth will focus more on companies which have more potential to grow, right, at a faster pace. It is less focused about giving you dividends like in your income. Individual companies which are more focused on preserving the capital, not reinvesting a lot into expanding the businesses. It will rather distribute it as dividends to the income holder. So if you're more looking for like a income generating fund, then you will explicitly go for the income funds. It's much compared to the growth ones, it's comparatively less, right? There's also income and growth, which will be like a combination of dividend funds as well as the non-dividend stocks, right? I keep it to all. I've selected this. So this will give me the 10 mutual funds. Quickly just running through them. Growth and dividends fund. All of these are in SAR. Then you have the Saudi Equity Fund. There is this GCC. So from the name, you can get to know whether it's a local fund or like an international fund. So GCC will go through the components. It will invest in the GCC countries. Then I do not see any international, like a North America fund that's hosted by AlRajhi, like we had it in SAB as well as in SNB, right? So unfortunately, you will only be focused in Saudi Arabia or GCC. Otherwise, if you're interested, if you're a Saudi investor and you want to invest in the US markets, I have another video on the AlRajhi Bank mutual funds, AlRajhi Capital mutual funds, as well as SAB AWL Invest as well, which has some of those opportunities for you. So let's go to my Excel, wherein I have used these 10 and added a bunch of other metrics and analysis being done on the historical. Just one side note, the mid small cap fund there's no details about this. So if you click on the mid cap fund, right? Mid small cap, as the name suggests, is investing in the mid cap and the small cap. I had covered what is large cap, what is mid cap, what is small cap in another video. The link is in my description. So as you see, this is a very new mutual fund that was launched last month. So you will not have much details, and therefore I did not cover this explicitly, but it might be a good opportunity or something that you can put in your radar, especially for those who are looking for high risk and high return kind of a profile, right? So mid cap and small cap, when they grow, they will shoot like a rocket, but when they have to fall, they will fall like anything else, right? So if you're someone who can handle that volatility, you can also consider this. Let's get started. All right, so coming back to the Excel template, which I have customized to whatever I just showed you on the website and added a bunch of additional columns. This is how I just keep track of, some of the indicators that I was discussing earlier. So these are the 10 equity mutual funds that is hosted by AlRajhi Capital. I have marked the last one as red because there's not much data available about this. A quick feedback to AlRajhi guys, if you're watching this video, you really need to skill up your fact sheet. First of all, you should also have an English one. It should not just be Arabic. And even some of these charts look very primitive. You can really upskill your charts and add additional informations like the sectoral balance. The sectoral chart that you have on the pie chart that you have on the report, it's actually useless. It just highlights 3 or 4 randomly, not covering the whole 100% equation. So please, if AlRajhi guys are watching, or some AlRajhi folks in the capital house, please tell them this, give them this feedback. Okay, so coming back, so these are the 10 funds. Majority of them are all growth, right? Except for the AlRajhi Growth and Dividends Fund, which is also providing you dividends. Right now, first thing was just to go through whatever historical data we have. We have a 5-year returns number on the fact sheet. If you look through it, you will be a bit shocked. Okay, 126%, 115%. Wow, your investment is almost doubling in 5 years, which is not in a way true. It's an absolute return, which means that if the NAV of the mutual fund was 10 in 2015 and it has become 20 in 2020, right? So in 5 years, basically from 10 NAV, it has gone to 20. So that's a 100% return. It has doubled it, but you have to always calculate the annualized return, right? The annualized return is actually a basic formula, and as per that also, it's a very good number. So it's somewhere between 11% to 18% is what you will see across the mutual funds. Doesn't mean that the one with 11% is bad. If you read the name, it's AlRajhi Materials Sector Equity Fund, which is like a thematic fund that I was explaining in the last video. Thematic funds are highly cyclical, so maybe these 5 years were not the best, for the materials sector, but maybe the next 5 years could give you as high as 30%, 40% as well. So you cannot just rely on this 11% being lower than the 18%, meaning that this fund is not a good fund, right? It's a thematic fund. The inclusion fund and momentum fund, there's not data because this is also institutionalized this year, so not much data about even the 1 year. It has only been up for like last 3 to 6 months, so we'll have to monitor that. But okay, so before going to the next sector, let's go into the portfolio holdings for some of these, right? So I just picked one of them, and we can also go through one more, right, live. So this is the AlRajhi Freestyle Saudi Equity Fund, and this is the top 10 holdings in this fund. So if you go to the first one, it's Makkah Construction, then you have Saudi Research Marketing, National Gas, Saudi Industrial, Tadawul Group Holdings, then you have Arabian Drilling, then you have the Aramco coming here, the Company for Cooperative Insurance, Suleiman Al Habib, and then Abdullah Al Uttaim. One thing you will observe, if you can compare this to the SAB Invest funds, right? Most of them there were large cap funds. So you will see like AlRajhi Bank, SAB Bank, SNB Bank, all the banks were there. STC was there. You had Aramco was there, Maden there. So all the big names were coming there. But across all the AlRajhi Capital Fund mutual funds, you will see that it's a mix of small cap, mid cap, and a little bit of large cap that you will see in the top holdings, right? So for example, Makkah Construction is a small cap construction fund, right? Which has all these the buildings across the country. Suleiman Al Habib is a big hospital chain. It's a large cap fund. Al Uttaim Markets, the retail chain, that's a mid cap fund, mid cap stock. At the end, you have the Tadawul, which is a mid cap stock. You have Saudi Research Marketing, which is a small cap stock. Aramco, of course, it's a mega large cap stock. So it's giving a mix of large, mid, small. I'm also looking into some another one. So I just brought in the AlRajhi Saudi Equity Fund. So in the Saudi Equity Fund, you will see the biggest component is the AlRajhi Bank, which is a large cap bank, 13%. I can also see Elm Company. I see Aramco's. I see Bupa Arabia Insurance. I see Nadi Medical. So some of these are like really mid cap stocks. So it's a little comparatively less on the small cap, has a more component of the mid cap and the large cap stocks in it, right? So this is a much more stable one. And if you go back to the table, that stability, I mean, in terms of returns also, it's quite good, right? It's giving you a good solid return. So now let's get into the technical parameters, right? So I'll unlock this. Here in the technical parameters, we are covering the Sharpe ratio 1 year, the last 5-year Sharpe ratio, beta for 5 years, alpha parameter 5 years, and then standard deviation. Just to give a recap, I'll start with beta. What is beta? Beta is kind of like what is the risk factor as compared to the benchmark index that the mutual fund is following. So when you say it's 1, means that you're as risky as the benchmark index. If it's less than 1, means that you're less riskier than the benchmark index. If you're greater than 1, means that you're slightly more riskier than the benchmark index. So typically we will prefer funds which is like on the lower side of 1. Alpha is the additional return that the fund is able to provide, beating the benchmark index. So going for as high as possible. So in this case, you're saying that the benchmark, you're trying to get almost 14% higher returns than the benchmark index. You should not just blindly go for the higher returns, and that's where a factor, which is the Sharpe ratio, combines the beta, the alpha, as well as the risk-free assets that is available in the Saudi markets, like the treasury bill or the sovereign bonds, right? Risk-free. So factoring in the risk of the mutual fund, the returns of the mutual fund, as well as the risk-free assets in the markets, it will give you Sharpe ratio. So ideally, going for Sharpe ratio, which is on the higher side of 1, is like a good indicator of the returns, risk-adjusted returns of the mutual fund. And then standard deviation is giving you the volatility index of the historical performance. So ideally it should be on the lower side. So lower means that it's much stable, and then comparing it to your Sharpe ratio and the alpha and the 5-year annualized and returns that we were seeing earlier. So this gives me a flavor of the stability, on the absolute returns, the stability, as well as the risk adjusted. So if you look at these 9 stocks over here, in terms of the the beta, the risk factor, it's very close to the index, which is a good sign. Alpha has been consistently higher than, so it's trying to beat the benchmark. The benchmark will be different, by the way, for all these funds. So because some of them are large, mid, small, it will have a different benchmark. Some of them are thematics, it will have a different benchmark. Some of them are momentum funds, it will have a different benchmark, right? Standard deviation has been consistently close to 14 to 20. I mean, it's a relative index. So maybe, if you see the freestyle Saudi equity fund, your standard deviation is on the lower side. Your Sharpe ratio, we just have 1 year. It was launched a couple of years back, just 2 to 3 years back. So the Sharpe ratio is on the higher side of 1, which is a good indicator. The beta is on the lower side of 1, which is a good indicator. The alpha is really great. So this is one of those funds which is really good at the moment, right? At least based on the last 5 years. Growth and dividend fund is also on the highest side, right? So your Sharpe ratio is great, your beta is good, your alpha is good, your standard deviation is good. But now let's take, so what is not a good fund, just by looking into the technical parameters, right? So what you'll observe is that this multi-factor index funds is like much lower than 1 on the Sharpe ratio, which tells me that it's hardly beating the benchmark, right? 1.23. The standard deviation is also on the high side. So what is interesting about this, if you look into the portfolio of this, so this is the MSCI Saudi multi-factor index funds. Actually, the portfolio is really good. If you look at the top 10, you have the Aramco, you have the STC, you have the Etisalat, you have Sulaiman Al Labib, you have Elm Company, you have Alutay Market. So all of these are like on the top, on the higher side of the mid cap stocks or the large cap stocks themselves, right? Bank Uzaira, I'm not sure. I think it's in the small or mid cap company, but the rest are really good ones, right? So despite of having like a higher proportion of large cap funds, the volatility has been on the higher side, which is quite interesting for me. Even in terms of returns, it has been providing some good returns. So this was close to 14%, which is really good, given that it has been working for just 3 years now. So it's something I would really monitor for the coming, in the coming period. So one of them, if you have an AlRajhi Capital fund house and you're interested in the equity mutual funds, one of them is the Saudi equity fund. The other one is the multi-factor index funds, and the third one, it would be the Saudi equity, the freestyle Saudi equity fund, based on the portfolio it has, based on these technical parameters, based on the returns that it has been providing. Personally, I do not want to diversify into GCC countries because I already have an exposure to Indian markets, to the US market. So I do not want to diversify into all the countries in the world, right? So I was explicitly interested only in KSA because I am in KSA and I know the potential of this country. So I'm not personally interested in GCC, but if you're interested in GCC, you should just check this. One of these into the portfolio of the AlRajhi GCC equity fund. You have Makkah Construction, you have the DEWAR, the Dubai Electricity Water Authority, you have East Pipes, you have TCOM Group, Saudi Aramco, Saudi Arabian Oil, AlRajhi Bank, Sulaiman Al Habib, L Company. So what you're observing is that even though it's a GCC fund, almost 80% of the individual stocks are actually from KSA. So it doesn't make sense to just buy an equity fund just for the sake of over diversifying the GCC, where 85% of the individual stocks are actually from KSA. So rather, just to be fully into the KSA markets. That's my personal opinion. But if you're interested into GCC and the other Arab markets, then you should also check this one. Now let's get into the expense factors, right? So you have the expense ratio and some of the subscription fees. If you remember SAB Invest, all the funds had a very high subscription fees, and that's one of the feedbacks I have for almost now all the capital house. The minimum subscription amount is 5,000. But what is very surprising for me is there are 3 to 4 funds, like the Inclusion Fund, Momentum Fund, the Growth and Dividends Fund, and the Arab Equity Markets Fund, where the entry is 10 Riyal. The currency is Riyal, so it's just 10 Riyal. So I'm a bit confused. I'm a bit interested, very curious. Is it actually 10 or is it a typo on their website? So if you have an AlRajhi Capital, I would really want someone to verify this for me. If you can log into your capital house and just don't buy it if you do not want to buy it, but at least go till the end page and just see whether it's actually 10 Riyals. But that would be that's a good initiative from them to lower the entry so that more retail investors can enter it. Otherwise, 5,000, 10,000 Riyals, it's too big. It's not something that I can do on a monthly SIP level, right? So that's one key factor that a lot of people will have, right? Then in terms of expense ratio, what I observe is that AlRajhi is on the lower side as compared to SAB Invest. If you remember SAB Invest, you had expense ratio as high as 1.2%, 1.6%, but here I'm seeing consistently very close to 0.5, 0.3, which is a good indicator. That's a good one. And also in terms of the management fees, 1.8, that's more consistent, right? So if I summarize it, right? So the ones that I'm really interested about is the Saudi Equity Fund, the Freestyle company, and then the multi-factor index. So it has a mix of high expense ratio and the lower, the multi-factor index fund. It's an index fund, right? So it will have a lower expense ratio. These are the top 3 for me, and the reason is already with you. But however, I will consider the GCC and the international funds separately. Right? You should not mix that with the local funds. So if you really want to have like a GCC exposure, you should consider one of these, or I really like the ones from SAB and the SNB as well, big funds. So again, if you have knowledge about this sector, you should not compare this to others. If you have a strong momentum, and if you have a strong gut feeling about the materials sector, which if you look at the materials sector, it has the Saudi Petrochemical, Saudi Arabia Fertilizers, Saudi Industrial Investment Group, the Aramco, SABIC, Al Corporation, I'm not aware of this, the City Cement, the National Gas, the Yamama Cement, Riyadh Cable. So it's a mix of materials and industrials, right? I hope you like this video and the deep dive into the AlRajhi equity funds. Let me know if you have any feedback on this. Do share, comment, give feedbacks to me. And very soon I'll be covering some of the other large capital houses in KSA. Thank you.